Hey traders and investors, it's Serge Berger here. The point I'm going to make today is very clear and straightforward, and that is I do think the S&P 500 is overbought. Now, to be clear, and I'm going to show you a couple things in the chart here, that does not mean that it can't go a little bit higher into year end. As of the day I'm recording this today, it is Wednesday, December the 14th, 2016. It's entirely possible to see somewhat of a trickle higher still, but I do think that the meat of this initial post-US election rally has run its course. So I do think the odds of chasing stocks higher here, if you look at the S&P 500 specifically, are quite low. So you have to get increasingly selective in which stocks, which sector, which groups are setting up to rotate higher. But broadly speaking, the S&P 500, the way I look at it, does look to be well stretched to the upside. Now we can look at this in many ways. You can see, for example, here a very simple measurement way of doing this. The S&P 500 above its 200-day moving average, very stretched. The S&P 500 above its 8 and 21-day moving averages. You can see that 8-day moving average is that blue line. The S&P has basically hasn't touched that line since about early December, about a week and a half ago or so. And so it's getting very extended above that moving average. Most of the time when that happens, there needs to be at least some sort of a sideways, if not downside movement in that. Now, if we go a little bit deeper into the S&P 500, starting with some basic option statistics, you can look at the put-call ratio of the S&P 500. Considering how far we've rallied, I think we're way too low in that put-call ratio at about 0.5 or so. Put-call ratio for the S&P 500 constituent options looks to be too low, which is a contrary indicator, which basically tells you that few people are buying protection. So from that perspective, I do think we're overbought there as well. Consumer discretionary stocks or consumer cyclical stocks have had a very, very big rally, and I do think that rally ultimately will continue at some point in the first quarter of next year. But here too, I do think in the near term, we're getting increasingly overbought, and that of course is an important type of analysis to do if you're going to look at the S&P 500 or a broad index. You're going to have to understand that you also need to look at the constituents of the index itself. So if we look at the BKX, for example, this is the banking stocks here too. While that rally does look certainly impressive, it is most likely unsustainable at this rate. And again, if banking stocks are going to be overbought, then it's going to be very difficult for the broader market to start pushing higher, at least in rate of change terms. So a lot of things here coming together. S&P 500 also has reached a lot of upside targets that the street was looking for 2016. A lot of folks had upside targets around 2,250. We are now overshooting that a little bit. Again, it's entirely possible we see 2,300, but again, the meat of this rally here for the most part looks to be over, and I wouldn't be, personally, I'm not looking to buy any more S&P 500 here. In fact, if anything, I'll be looking to play this on the short side if we see any bearish reversals. So again, reward to risk on the long side here in the S&P 500, in my opinion, is getting weaker by the day.